Hello, everybody. Welcome to Monday. The S&P 500 was down 0.3% today. Kind of a 1-2 punch that happened today, really, that brought the market down. It was down a little bit more in the morning, so it actually recovered some. But over, Sunday on 60 Minutes, Chairman Powell, the chairman of the Federal Reserve, did an interview and was pretty specific about pushing back against a rate cut in March specifically. And so we've gone from, a near certainty of rate cut in March last year to really, near certainty that they're not going to do it. And even the May number, which they meet May 1st, would be the next meeting after the March meeting, was at 4.9% chance that we'd stay the same. And otherwise they were going to cut it. And now that's up to a 38% chance that they'll stay the same. So still betting on a rate cut by May, but starting to soften that bet. Because the other punch that came out was that the Institute of Supply Managers, the ISM, did their report on the services side of our economy, and it was at a 4-month high. So again, just continuing to show the strength of the economy. We keep getting reports and job reports and all the other things that are going on. And just again, that just tells the market even less chance that the Federal Reserve would want to lower rates when things are still doing quite well. Really, they're only going to want to lower rates for two reasons. One, if prices are falling, too much, and might end up with deflation, which doesn't seem to be happening. But then secondly, just if we're starting to have a lot of softness in the economy where we're heading into a recession, again, they've got to do this in advance so that we don't get too far into those recessions or deflation. But right now, if you look at things, it's still pretty good. So I don't think these are big issues. Again, the market is just going to continue to adjust itself. It's already adjusted more or less to the fact that we're probably not having a rate cut in March. Probably will have to adjust, in my opinion, to having no rate cut in May. We'll see how that goes too. Again, from the get-go, the Federal Reserve governor's been talking about more of that kind of June, September timeframe for potential rate cuts. So sort of like back-end loaded for the second half of the year. They are expecting as a group via the dot plot that we got back in December to cut rates by 0.75% for this year. Again, we'll get another dot plot coming up here. I believe they do one here for that March meeting, see what their projections are now. But the market was expecting a 1.5% rate cut at the beginning of this year. So a big difference. And that's why the market's going to, adjust to that. But again, I don't think these are really big issues. It is important that the Federal Reserve not keep rates up for too long, and crash the economy or lower them too soon and get a resurgence of inflation. So that part is quite accurate. But just what the market's expecting and what the Fed does, I don't think that's going to have a huge impact. We continue to see, strong markets. And even today, the market was down in the morning and, almost came all the way back up into positive territory. There's a lot of buying pressure and a lot of interest in this market right now. So look forward to seeing what's going to happen tomorrow. Thank you.